Hi traders, welcome back. Today I want to continue where I left off in the last video. For those who didn't see it, I made a video about backtesting a new strategy. In that video I backtested a strategy I'm working on for like 10 days and showed that if you use those 10 days it is a very high profitable strategy. So if you didn't see it yet, watch it. I noticed that the volume is a little bit low, so sorry for that. For this video I turned up the mic a little bit, so yeah, hopefully the volume is better now. But if you're going to rewatch this, make sure you turn up the volume a bit. So small recap, the strategy itself is based on the price action strategy from Mac. I guess most of you know it. It's a scalp and run strategy. You can find more about it on his website. And the other part is based on Tim's e-mini-mind strategy. You can find more on his website. And the reason why I wanted to combine the strategies, because both really have their advantages and disadvantages. For example, if we look at Mac, then Mac defines clear entries. It's really well written how you find the second entries, and there's not much objectivity around it. On the other hand, the exits and the trailing strategy of Tim from e-mini-mind is also very well defined, and I think it's better than Mac's, leading to bigger profits. So that's why I wanted to see if I could combine them and use the entries from Mac together with the stops and the trailing exits from Tim, just to see how that would perform. So, well, I explained most of it in the last video already, but just a small recap. Here we have a typical entry of Mac with the price action trading. We have a leg up. We have our first entry right here, and then as soon as we break the high of the previous candle here, we have our second entry long. We enter one tick above the previous candle and put our stop loss one tick below the signal bar, and we go for 4 ticks. That's the basics of Mac. And of course the second entry needs to appear on a key entry point, like a trend channel or an EMA. Now what we are now adding to the mix is we're going to draw a Fibonacci retracement, like here, from the low to the high. In case it's a long, in case it's a short, it's of course the other way. So from the low to the high, then it comes back. And if this second entry here is appearing between the 50% and the 61.8%, then we will take the entry long, the trade long. If it's appearing somewhere else, for example in here or below the 61.8%, then we won't take the trade and we just skip it. So in short, we are only taking trades. And why? Whoa, no, I moved it. Come back. Okay, so we're only taking second entries when they appear between the 50% and the 61.8% retracement. Our stop still goes one tick below the signal bar. We still enter one tick above the previous candle bar when it breaks. So that's all according to Mac, still the same. The only thing we change is that our first target is 12 ticks and not 4 ticks. So that's a big change. Our first will be 12 ticks, and from there we trail our stop. Now how are we trailing it? Let's move to a little bit more open space if we can, or maybe clean the board. So let's just say that this is price. Oh, that was a little bit too early. Let's try again. Let's say that you have the price doing this. And I'm just adding some points, so let's say like this, and that we opened a trade somewhere around here. So that's our trade. I hate trading view for this. There we open our trade. Our first target is 12 ticks, and now we have to decide where we will drill our stop. So our stop starts, of course, here under the signal bar. Come on. So it starts right here under the signal bar, and from there we're going to trail it up. Now the idea is that we're going to put the stops under the swing low. So here we see a swing low, and as soon as it breaks this swing low, we're going to place our stop from here to there. So the moment it breaks it, which is right here, we move our stop 1 tick below the swing low, which would be well, somewhere around here, I guess, right? If you look at it, so yeah, it's right around here. We would move our stop to this place. So our stop is now here, and yeah, we just continue doing the same. So price is making a new high, making a possible swing low, bouncing around, and the moment it makes a newer high, we putting our stop right here, or maybe even there. That would be something around here. Yeah, maybe a little bit back, so something like this. So our stop now goes from here to there. And okay, price again makes a new high, makes a new low, but doesn't break this swing high. So we're waiting until it breaks this swing high, and when it does break the swing high right here, we put our stop in this case under the swing low, so that would be somewhere around here. And now our stop will be moved to the new swing high, or swing low, sorry, swing low. And that goes on and on until at some point price will start doing things like this. And then you will just be taken out at this point, and your trade now would be well, maybe added like here. Let's say we entered right here, then your trade now would be like this. So again, we're just trailing each swing low. At the moment the price breaks out and moves higher, we move our stop under the swing low. Very easy. Now sometimes price doesn't make any swing lows or new swing low and just moves up like crazy. So it could do like this, for example. And in that case, if this happens, where price just rockets up and doesn't make any retracements, we simply take our Fibonacci tool and we trail our stop below the 61.8. So as long as price is moving up, we move our stop under the 61.8% like this until it starts making a swing low. So at this time our stop would be right here. Okay, enough over the strategy. I think that's really clear now. So what I did now is instead of backtesting it for just 10 days, I went a little bit further and tested it for 60 days or 3 months. So I tested it from beginning of October to what is it today? Well, it's now Saturday, so till the 11th of December. And I took all the trades according to what we just discussed. Well, I didn't took them, but I draw them on the chart and used my backtesting indicator to record them. And well, you can already see that it's 172 trades, 60 days or 59 days, with a net profit of $22,827, win ratio 84%, and a profit factor of 6.48. So no doubt that this is very, very profitable. And as you can see, we started on the we started on the 13th of October, and yeah, I'm just spent some time and I took every trade I could find according to the rules and draw them up, all the 50% retracements. So that's one. From there, I wanted to analyze it a little bit further. So I uploaded all these backtesting trades to my trading journal. In case you don't know it yet, I wrote a trading journal. You can find it at improve-your.trade. You can sign up for a free trial if you want just a free 30-day trial. And the nice thing is that this integrates with NinjaTrader. So all the live trades you're doing in NinjaTrader, but also the backtesting trades, you can upload those automatically or in real time to the trading journal. So all these 172 trades are now in my trading journal, and there you can analyze them even further. So just to let you show, if I go to my journal, then you can see those 172 trades all in here. Green is of course a winner and red is a loser. One thing you already see that we have far more winners than losers. And even on the winners, we see that the average R, which is the risk to reward ratio, which we made on a trade, not which we anticipate, but the one we really made, is on average more than 1, which is really nice. That means that on average you make more than that you risk per trade. And well, if we go to another page, you can see here there are some more losers, but that's fine. So yeah, here are all the trades. And one thing we can look at is, for example, the different months. So let's go back to October, because we started in October. And in October we started on the 13th, like you can see. And in the calendar you already see that we have 2 red days, 2 days where we lost money, but all the other days we made money, and we made way more than we lost. So yeah, very good. And the same goes for November. If you wait until it's loaded, again 2 red days, and the rest is all green. And December it's same. Also on average we see in December 2 trades, 4 trades, 12 trades a day. And November, let's see, 4 to 6, 4. I think on average you can see you have about 2 to 4 trades a day. So that looks already very promising. Now if you go to the analysis, for example, or let's go to the dashboard first. The dashboard is the main overview of all your trading. Here you can see your account, which is clearly going up, always nice. We see our win ratio. We see our average risk to reward, which is, like I said, it's above 1, which is good. Also our expected value is $130, so for every trade we make we can expect to make $132, and that's for on average. So any trade you make, you will make on average $132. We can also see that we have a winning streak of 44 trades, so we had 44 winners before we got a loser, which is really nice. And we only had 4 losers before we got a winner again. So you know that if you have 4 losing trades, that can happen, and that's just normal. But the chances are that on the 5th or the 6th trade you will have a winner again, which I think is really nice to know. And the same goes for the winning streak. If you have 44 winners, then you know that the chance is very high that your next trade will become a loser. But after 44 winners, that should not be an issue. Profit factor, that's insane, 6.49, and I didn't see much strategies which had this kind of profit factors. And of course you can see the equity curve here, which I started out with $10,000, and after 60 days it went up to $32,000, almost $33,000. So yeah, it's clearly making money. You can also see our max drawdown, which is the line here. I guess this is the highest point. So if you hover over that, then we can see our drawdown is max 4.7%. So that's very nice. And you can see the little dent in here occurring, and also right afterward. So from trade 31 to trade 46, we didn't really make any money. We went a little bit sideways, but the good thing is with this that we didn't lose much money. So yeah, it never even got underneath the moving average. Let's go to the analysis. Again, we see the equity curve and the drawdown. We can see the win ratio. Well, we already saw that. Our average loser $160, average winner $184. That's very nice. We can also see that our biggest loser is only minus $291, which is not that much. But our biggest winner is almost $1,100. So that's very good distribution there. And if we look at the hours, you can see I traded from 9:30 to around 1500, and there are not really big differences in it. You can see that we are making maybe a little bit less money, or between 11 and 12, and between 13 and 1400. But so far so good, I think. There's no reason to stop trading, for example, after 2 o'clock, according to this graph, because after between 2 and 3 o'clock, it's even one of the highest point. So we make a lot of money there. If you look at the days, you clearly can see that Wednesday was the most profitable day, and Thursday was the least profitable day. We still made money, but most money was made on Wednesdays. And surprisingly, the Friday is doing very well too. It's no different than the other days. What people say that Friday often is not a good day to trade, it's not showing up in the backtest. I think all days are very nice. Maybe the Thursday was not the best, but clearly the Wednesday is the best. And the monthly, that's we can see October was the best one, and then volatility is slowly dying. And December, of course, is the lowest. That's not because it's the worst month, but we are just on the 12th of the month, so we only had 10 trading days. So you should really take this value and do it times 2.5 or something like it to project it, and then you would probably come up with the same amount as November. But overall, pretty good. Another thing we can look at is the R multiple. Let's make it a little bit bigger. And our multiple shows us how much reward to we risk we are making on our trades. And we see that the biggest ones, these are 43 trades, we have a risk to reward of 0.7, and the second one would be 1.2. So that's pretty okay, I guess. It's not great, but it's okay. What is good is that our losers are all very low. So minus 0.28, minus 0.127. That's pretty good. It's not that we're losing a lot of money on the trade. How can I explain it? For example, let's say you have a stop loss of 10 ticks. Now, then if our first target would be 12 ticks, then and the trade would be a loser, then you can only lose 12 ticks. But then, like I said here, it's not that you're losing 30, 40, 50 ticks. So once you see bars popping up right in this zone here, you are in trouble, because you're taking way more risk than that you get as a reward for your winner. But this is minus 128, I think is pretty good. And of course the real money is made on the right side, where we have a couple of outliers. This one almost make 10 times. We have one here which makes 5.7 times, and we have a couple of here. So overall the distribution, I think, looks pretty good. Our holding time, how long do we hold on to a trade? Most trades are between 5 and 15 minutes, which I think is a good time for a day trader. For scalp, you're probably between 1 minute and 5 minutes. For swing trades, you would look more at 60 minutes to maybe a couple of hours or even days. But for day trading, between 5 and 15 minutes is pretty good. And of course we have some which are taken out faster, and we have some which take a little bit longer. But the distribution also for the whole time looks pretty good, I guess. And we can also see that our most profitable, the most profit we made between the 5 and 15 minutes. Risk of ruin, well, shouldn't surprise you. We have like a 35% chance to lose 1% of your capital. Now that's I think normal, because normally on every trade you risk like 1-2%. But for let's see, let's say how much can we, 0% chance to lose 10% of your capital. I'm not sure if this is correct, because I would expect that to be a little bit more. But overall it looks good, but it looks a little bit too good to be true. So I have to dig a little bit deeper in this and see if this really is correct. Because I expect the numbers to be low, but not 0. But another thing we can do is run a Monte Carlo simulation. And for the Monte Carlo simulation, we take all the 172 trades, and we're going to project them to the future. So you can see we are simulating 500 trades, and those trades are based on the 172 we already made, but we're making some changes to them. We are filtering out our biggest winners. So let's say we have in those 172 trades, we have one. Suppose we have one winner of 5,000 euros or dollars. That would have a very big impact on the results. So I'm filtering those out. I don't want to have 1 or 2 trades which if I miss would give completely different results. So I'm filtering out my biggest winners. I can also filter out my biggest losers if I want, but that doesn't really matter. I'm randomizing all my trades, meaning the order is changed, and also I'm randomizing my profit by 10%. So for every trade, I randomize the profit by 10% just so to simulate that maybe I got out a little bit earlier or a little bit later. And you can play with this and add all the settings yourself. It's 50 simulations. Maybe should do like 150. 100. That's a little bit too much. I was more thinking of 150. Oh dear. Yeah. Let's just reload it because this is going to take ages. There it is again. So let's take 500 simulations. I think that's pretty good. Okay, so 500 simulations where each simulation runs 500 trades, and you can see the results clearly going up. And in the worst case you made around 70k, and on the best case you made around $80,000. So yeah, what more can you wish for? So all in all, this setup is I think this strategy is working pretty good. I have been trading it now for 2 days, and both days were very profitable. So I'm going to continue trading this in the next year, and get some more live results, of course, because you can backtest all you want, but in the end, if you cannot make money with it in real life, then it's not worth it. But the first 2 days were very profitable, but that's just 2 days in live, of course. So we'll see next year how it performs. But yeah, I wanted to show you the results of a larger backtest of 3 months, and show you that I think this is a very nice strategy. And maybe think about it. Look at E-mini-mind, price action trading if you want. One thing I didn't tell you yet is for the moment I'm trying to keep this strategy as simple as possible, but I do intend to extend it a little bit further. And one thing which really could help to make it even more profitable is by adding some measured moves and Elliott wave to it. And if you want to know more about that, then there's just one place to go. You should go to Tradedevils. These guys know everything there is about Elliott wave, measured moves, and yeah, I highly recommend them. And that will be something I will be looking into the next videos, if we can add everything those guys are teaching to the mix, and see if we can improve it even further. For now, I guess this is it. Again, if you want to know more about Tim's strategy, go to E-mini-mind. The same for Max strategy, go to the price action trading system.com. If you want to know more about the indicator we're using here, you can find it on Tradedevils, and then you can go to indicators. Here you find all our indicators, and you can even get a 5-day trial of all of them. So be sure to check that out. And the ones I've been using today is the price action one, which is right here, and the the initial balance, which is right here. So yeah, make sure to check them out. There are also videos on it explaining how they work and what they do. If you want to know more about my trading journal, then go to Improve Your Trade. And yeah, if you liked the video, give it a heads up, give it a like, subscribe, you know what to do. And let me know in the comments if you what you think of the strategy. Do you think it's worth looking into it, or do you think it's backtesting is never useful and that it doesn't tell you anything? I'm very interested in what you have to say about it. So leave your comments in the below the video. I will add all the links below also, and see you the next time. Okay, bye bye.